If someone asked you right now how much your home is worth financially, would you know the answer? Most homeowners don't. And that's a problem because your home equity is one of the most important numbers in your financial life. It can influence whether you should sell, refinance, borrow, or simply hold on to your property a little longer. The good news? You don't need a financial advisor or hours of research to figure it out. You can calculate your home equity in just a few minutes using a simple formula. Let's break it down step by step. What home equity really means. Home equity is the portion of your home that you truly own. In simple terms, it's the difference between what your home is worth today and what you still owe on it. For example, if your home is worth $350,000 and your remaining mortgage balance is $200,000, your equity is $150,000. That $150,000 represents your ownership stake. If you sold the home today, before fees, that's roughly the amount you'd walk away with. Over time, your equity typically grows as you pay down your mortgage. Your home increases in value. That's why home equity is often considered a major source of wealth for homeowners. The simple formula you need. Here's the only formula you need to remember. Home equity equals current home value total amount you owe. That's it. Two numbers. One subtraction. Now let's quickly walk through how to find each number. Step 1. Find your current home value. The first number you need is what your home is worth right now, not what you bought it for. There are a few ways to estimate this. 1. Online estimates. Fastest. You can look up your home on real estate websites that provide automated value estimates. Pros. Quick and easy. Cons. Can be inaccurate, sometimes off by thousands. 2. Compare recent sales. Better. Look at similar homes in your area that sold in the last 3-6 months. This gives you a more realistic idea of what buyers are actually paying. You can also ask a local real estate agent for a free comparative market analysis. See MA. 3. Professional appraisal, most accurate. If you want a precise number, hire an appraiser. Cost, usually $300, $600. Benefit, reliable value you can trust. Tip, don't rely too much on your property tax. Value it often doesn't reflect true market conditions. Step 2. Find your total loan balance. Next, figure out how much you still owe on your home. This is easy. Log into your mortgage account online or check your latest mortgage statement. Look for your remaining principal balance, but don't stop there. If you have a second mortgage, a home equity loan, a home equity line of credit, HELOC, you need to add those balances too. Why? Because all of these loans are tied to your home. Step 3. Do the math. Now put it all together. Example. Current home value, $420,000. First mortgage balance, $255,000. HELOC balance, $15,000. Total owed, $270,000. Home equity equals $420,000. $270,000 equals $150,000. That's your estimated equity. Keep in mind, if you sell your home, you'll still need to subtract agent commissions, closing costs, other fees. But this number gives you a solid starting point. What can change your equity? Your equity isn't fixed. It changes over time. Here are the biggest factors that affect it. 1. Rising home values. If property values in your area go up, your equity increases automatically. You don't have to do anything. 2. Paying down your mortgage. Each payment you make reduces your loan balance. Early on, most of your payment goes toward interest. Later, more goes toward principal, which builds equity faster. 3. Home improvements. Upgrades like kitchens or bathrooms can increase your home's value. but not all renovations give a full return, so choose wisely. 4. Market declines. If home values drop, your equity decreases. In some cases, homeowners end up owing more than their home is worth. This is called being underwater. 5. Borrowing against equity. If you take out a loan using your equity, like a HELOC or cash out refinance, your debt increases and your equity decreases. Why knowing your equity matters? Understanding your home equity puts you in control. Here's why it's so important. If you're thinking about selling, your equity determines how much money you'll walk away with. More equity equals more cash in your pocket. That money can be used to buy your next home, pay off debt, invest, or save. If you're considering refinancing, equity affects your loan options, your interest rate, whether you can remove private mortgage insurance, PMI. If you need access to cash, you can use your equity without selling through home equity loans, HELOCs, cash out refinancing. If you're planning ahead, even if you're not selling anytime soon, knowing your equity helps you make smarter, long-term decisions. What if you have little or no equity? Not everyone has strong equity, and that's okay. If your equity is low or negative, you may not make money from a traditional sale. You might need to bring cash to closing. This situation is more common than you think, especially if you bought recently. The market has dropped. You've borrowed against your home. If you're in this position, it's important to explore your options early. You might consider waiting for the market to improve, talking to your lender, looking into alternative selling options. The key is knowing where you stand so you can plan accordingly. Calculating your home equity doesn't have to be complicated. Just remember, find your home's current value. Subtract everything you owe. That's it. In just a few minutes, you'll have a clear picture of one of your most important financial assets. And once you know that number, you can make smarter decisions whether you're selling, refinancing, or simply planning your next move. Now that you know how to calculate your home equity, take a few minutes and run the numbers for your own property. You might be surprised by how much value you've built. And if you're thinking about selling, refinancing, or just want help understanding your options, don't guess, talk to someone who can guide you based on your exact situation. Reach out today for a quick, no-pressure consultation and find out what your home is really worth to you.